Hello, everyone, and welcome to this panel on SCB 10X's second DeFi Virtual Summit. What we're going to be discussing here today is the exciting topic of DeFi in the US versus DeFi in Asia. My name is Rishi Ramchandani, and I'll be a moderator for this panel. I just want to thank SCB 10X and everyone here for hosting the virtual conference. They've been absolute innovators and leaders in this space, so thank you for bringing us all together. A quick intro, just so you know who's speaking to you. As mentioned, my name is Rishi. I head up Asia for BlockFi. BlockFi is building a bridge between cryptocurrencies and traditional finance to advance the overall digital asset ecosystem for individuals and institutional investors. But without further ado, I'd like to introduce our panelists and the reason we're all here today. So Michael Anderson, the co-founder of Framework Ventures, joining us from the US. Jason Choi, general partner for Spartan Capital, sitting over here in Asia, in Hong Kong. His background is making me feel quite homesick. Hong Kong is where I spent most of my life right now. Both firms recently launched large DeFi funds, so congratulations to both of you. Why don't we just get into it? Why don't we start with introductions? We'd love to hear a little bit about yourselves, your firms, and most importantly, about the new funds and the investment philosophy behind them. Why don't we start with Michael?
Sure. Yeah. Thanks for having us, SCB10X and Rishi for moderating. Framework Ventures was started in 2019 with my co-founder Vance. We are a thesis-based venture firm that primarily focuses on decentralized finance. We're structured a little bit differently than most funds in that we have the venture investment thesis for our fund. But then we also have a company called Framework Labs, which is building technology in association with the investments that we make. And so we have a slightly different approach in that we are building as well as investing and incubating new concepts inside of Framework Labs. We're really excited to announce a couple of months ago that we launched our second fund. It's a $100 million venture fund, and it will be doing a lot of the same, focused on DeFi and a little bit of everything in between.
Great. Okay, awesome. Thank you for that. How about you, Jason?
Yeah, thanks for having us. So I'm a general partner at Spartan Capital. So we basically run two funds. So since 2018, we've been investing out of a liquid vehicle. So that's more of a fundamentals-driven public market strategy that was quite rare at that time, where not a lot of people were focusing on fundamentals. And then earlier this year, we raised a venture fund, about $100 million, to also focus on DeFi with a global mandate. So the purpose for that fund is to not really participate in liquid markets, not really care necessarily about what the markets are doing, but really just invest in projects early on and hold it with a 5-year kind of longer term horizon.
Okay, got it. Okay, great. So let's dive straight into, I work at a company where we're headquartered in the US and we're growing out in Asia right now. And given that you guys are both sitting on two different sides of the world, I'd love to kind of get your thoughts on the global trends you see in DeFi, and then also the emerging trends, and maybe focus on the differences that you're able to differentiate between the US and Asia. Maybe start with you, Jason.
Yeah, absolutely. I think it's always an interesting topic because in the media, there's always this impression that Asia is kind of one entity, but as both of you know, Michael and Rishi, Asia is incredibly diverse, and there's so many different stories from different regions. And one of my favorite stories this year was the fact that a lot of the population in the Philippines were playing with this game called Axie Infinity, and it really championed this model called play to earn. So it kind of straddles the DeFi world and the NFT world in the sense that there is an element of commerce in there where people can be playing this game on their mobile phones and really earning cryptocurrencies. And there was a documentary that came out that called Play to Earn that described this phenomenon. And a lot of these guys are earning, equivalent of their monthly wages in days, in weeks. So this is really a paradigm change. And I think just kind of zooming out a little bit, this year was really characterized by growth. And with growth, you have scrutiny. So to give you a sense of how much growth we've had, and this is not just an Asia phenomenon, this is a global phenomenon. We started with about $200 million in TVL and DeFi. Now I think across all of the chains, we have about 100 billion. So there's an incredible growth within 1 year. And because of that, regulators around different countries and regions in Asia have started to respond. And I think the second biggest story that I love to kind of bring up is the fact that China has been cracking down on crypto quite a bit. So I'm sure we'll touch on regulations a bit, but if I say if I have to kind of bring up two major trends, I'd say growth and also regulation.
Growth and regulation. Okay, that's fair. We definitely will touch on regulation later. But I'll let Michael give his view on this.
Yeah, so I think those would probably be the two top points that I would describe to describe the differences between what's been going on in, I'd say, the rest of the world and particularly in Asia. I think the other thing that's really important to note too is just the way that the private funding landscape looks in the US versus Europe versus Asia, and it comes in all flavors and all shapes and sizes. But I think in the United States, there's a very kind of clear-cut form factor of how to do private investment. And I think that model has been changing. It started with the SAF, and now there's kind of new preferred methods of doing those types of fundraisings. But what we're also seeing coming out of Asia is a DAO-based model, where you have funding going directly into a DAO. And I think that may be the bleeding edge in terms of innovation of how fundraising is actually going to go going forward for DAOs, especially in DeFi. So that's one of the things that I point to that's come out of Asia over the last maybe 3 to 6 months that's been really kind of provocative and interesting.
Got it. Actually, that could lead us on to the next question, which is basically fundraising. So the availability for US DeFi projects versus Asia. And I presume, or maybe it's a question to ask on your funds right now. Are you guys looking global? Are you guys looking in a specific region? Jason?
Yeah, we're looking pretty globally. I think in terms of the fundraising landscape, there is a lot of institutional capital that tends to move a little bit faster in the US. So we haven't seen, at least here in Hong Kong, for instance, we don't have major endowments, the like of Yale Endowment, which invested in Paradigm. So we don't have large pools of capital that are ready to be deployed into crypto as quickly as, say, the US. And I think for this cycle around, a lot of the conversations we have with family offices are still around education, kind of teaching them, what is DeFi, what is NFTs. But yeah, we'd love to learn about what's going on in the US as well.
I think one of the big things that we saw just during our fundraise process for the second fund is there was actually quite a bit of institutional interest. We had a couple of endowments as LPs. We had a large fund of funds in Accolade and a large registered investment advisor in Hall Capital as two of our anchor investors. And we got really excited just to see their excitement because when you see an institutional, especially someone who's really kind of thinking about this from first principles, but also thinking about this for the first time, it's really exciting because that there's 100 to 1,000 times more capital behind these initial LP checks. So I think that's the start. And to Jason's point, I think it's an education process for everybody in the industry. But this is the start of that education.
Yeah, I mean, I can tell you personally, I spend a lot of my time just on education. That like I would say that's most of my job is education because it's just growing the ecosystem, right? And then going from there. And a big difference I've seen over here, which Jason touched on, is the family office side over here. I think that's bigger because it's generational money. Whereas in the US, you're getting the next level where you're saying like endowments as well as just larger institutions where that there's stacks and stacks of it behind them too. Jason, do you see what has your experience been with the family offices, for example, specifically to DeFi?
Yeah, I think the dynamic family offices, as you said, is generational money, right? So a lot of the capital, for instance, in Hong Kong is from real estate. But even though the sourcing and the kind of investment process is driven by, say, the latest generation, a lot of the final decision still goes back to the original generations, and they tend to be a little bit more conservative. I don't think it's their mandate to really go that far out the risk curve, and crypto is probably as risky as asset as as it goes today. So for a lot of these conversations, it's really just kind of helping them see the parallels between crypto assets and assets that they're familiar with. And one of the easiest things to explain is actually DeFi. So it's actually easier to explain than Bitcoin because once you start to bring up Bitcoin, you're going to get into this whole narrative around, what is money? You're going to explain what fiat money is. But for DeFi, you really just use, terms that any financial analyst would be familiar with. You talk about revenues, you talk about PE ratios. Those things are a lot easier to communicate. And we're seeing much faster uptake this cycle compared to last cycle when DeFi adoption was nowhere near where it is today.
Yeah, I'd say last time, when I say last cycle, I'm talking 2017, 2018, it was more education on Bitcoin. Now it seems like we've hit that curve and now it's education DeFi, CeFi, and so forth. Michael, would you say there's any particular items that you're educating the institutional or the people investing into your fund that are different?
Yeah, well, I think one of the things that's additional, I totally agree with what Jason said. I think, one of the things that we spend a lot of time talking about is just value accrual. So what's a token versus what's equity? Everybody in the venture ecosystem is used to looking at corporations and used to saying, okay, I know what a seed and a Series A and a Series B stage look like. I know how to evaluate those from a metrics perspective. Nobody knows how to evaluate a pre-seed or a seed token investment. Or really, frankly, what the valuation model should look like post-investment. So I think that's one of the big things for us, just kind of comparing and contrasting how those two worlds actually do pretty much interrelate. But yeah, I think that's probably been the biggest thing for us.
Got it. Well, one thing I think is going to be in a lot of people's minds as they raise funds, and the reason I asked this to you guys is because you guys have done it successfully. And I'm not sure if you've done it cross region, if you guys looked at all the regions when you're raising the funds, but is there, that's a very direct question, has it been harder, would you say, to raise money in Asia versus the US for specifically for DeFi projects?
Are you asking about the fund raised for the fund itself or for specific projects?
The projects, yeah.
I'd say that, at least from my perspective, it seems like there's more capital, at least from an institutional level, that's ready to be deployed into projects directly from the US, right? You look at funds like A16Z, raised $2 billion. I think Paradigm's probably a few $1 billion now. So there are many of the kind of 10-figure funds are based in the US, whereas if I were to point to a single kind of Asia-based fund that's on the scale of some of these endowment-backed funds in the US, it's harder for me to name them. There's probably more number of funds in Asia, just by virtue, because it's a bigger region, and also I think regulation-wise it's also a little bit easier to navigate. But in terms of actual capital deployed into projects, if you look at the cap table for a lot of the kind of major DeFi projects that raised, most of these are still Western-based projects, and I think that's kind of where we come in, because we speak the language for both continents. We have people spread across Asia, so we kind of want to act as that bridge for projects who want to come to Asia. They want to find more partners in Asia. But I do think that edge will erode over time as more capital here is ready to deploy.
Michael, any thoughts?
Yeah, so we're based in San Francisco. You would think that most of our investments are in Silicon Valley or the Bay Area in general. And actually, I'd say the number one area where we have most of our portfolio companies is Australia. Probably second is Western Europe. And so most of our investments are actually international. And I think that comes down to a number of things. One of them is just the regulatory gray area, which I know we're going to talk about later when it comes to DeFi in the United States. But I think that there is an element of this being a global phenomenon, and teams can be anywhere and everywhere at the same time. And so I think that, the locale of a team is not as important anymore, especially because you don't have to go to Sand Road and shake your hat for dollars from the VCs that are all in that one place. But it is interesting to what Jason was saying around having that bridge between one cultural divide to another. And I think that's something that we're still trying to figure out, as it comes to, Binance Smart Chain, Asia, those I think are two different platforms and cultures that are just not exactly the same. So it is kind of a difference there.
Yep, fair enough. Let's use that segue to dive into the regulation side, because I know a lot of people have been asking me about that, and I am by no means an expert in DeFi nor regulation, but I will kind of give you my view from BlockFi and the regulation kind of hurdles and just general ecosystem. I kind of see it as at a very, very high level. Like, the regulations that have come out were focused on what was growing in 2017 and 2018, which was more exchanges for trading as well as custodians. And I think the regulations have wrapped their head around what are wallets, cold wallet, hot wallet, and so forth, as well as trading and exchanges and so forth. And then what happened is, lending started to come out in the CeFi space, but then also DeFi started to come out, and it's hard to grasp as a regulator, and it's hard to grasp globally as different type of regulators look at it. But I would love to kind of get your thoughts, like, maybe high level first, but what are your thoughts on the general landscape of the regulation within DeFi? Jason, maybe you can give the Asia view.
Yeah, so I think in Asia, I kind of think of it as China and then the rest of the regions, just because China's regulation landscape is so different. So I wrote this piece recently for Deribit Insights, kind of explaining what's been going on in China. So just to sum it up, basically back in end of May, we got a notice that mining and trading would be cracked down upon. And then later that month, Inner Mongolia, which was one of the larger regions for mining, decided to restrict Bitcoin mining. And I think what was really surprising to most people was that later that month, Sichuan, which is the largest in terms of hash power for Bitcoin mining, was also announcing that they will be at least assessing the impact of mining on you know on the economy, on the environment, and then I think after that, for the subsequent 2 months, we had a series of crackdowns, right? So I'm not going to go through each line item, but it involves things like cracking down on crypto influencers on Weibo, which is the Chinese Twitter, and then searches for certain words like Huobi or OKEx or exchanges are banned from search engines like Baidu and Weibo. So it was a series of crackdown that was, I think, somewhat expected, given that the timing was right before a pretty key date for the Chinese government, the 100th year of the anniversary of the Communist Party. And at the same time, it was surprising in the sense that we knew that a lot of the regulations that China typically rolls out is to protect retail investors, right? So every time retail mania gets to a certain phase, every time you start hearing stories about retail investors getting blown out by investing in scams, these regulations start happening. So that was totally expected. What was not expected was the crackdown on mining, which has happened before. It has been announced before, but never from the same source, which this time actually came from the very top of the food chain in terms of the Chinese government. So there is a very palpable pressure from the Chinese government to really clean up the space and also crack down on the space. And I think a lot of people have commented on this already, but we don't see it as an existential threat to Bitcoin. In fact, it decentralizes a lot of the hash power. But that's been most of the focus on the China side. So crackdown on exchanges, on kind of speculation and on mining. And on the rest of the regions in Asia, there's kind of piecemeal regulations here and there, right? So in Thailand, I think people are required to be physically present if they want to set up crypto accounts. Here in Hong Kong, there was a piece of regulation that's in notice phase right now. So still in commentary phase, but basically proposes to ban all retail investors. So non-accredited investors or professional investors, as they're called here, from using exchanges. So far, there's no kind of one guidance that's I think helping shape all of these regulations across Asia. Unlike I think in other countries, you have basically FATF giving out this guidance, and then regulatory entities like FinCEN start to follow some of the guidance. In Asia, you really see kind of very different attitudes towards crypto. So it's a little bit harder to kind of summarize, but yeah, I think if I were to summarize it, it's kind of piecemeal regulations here and there with various degrees of severity.
Michael, your view?
Yeah, so and obviously we focus a lot on the U.S. side of things, and so the Asian context is super helpful. I think one of the things that we've been spending a lot of time thinking about is that FATF guidance that came out and then was put to kind of an open question period or open comment period, and then was actually delayed until October. A lot of the stuff that was in there was pretty crazy in terms of an understanding of how the technology works. And so I think hopefully we can get a new round of commentary and new perspectives when that revised guidance comes out in October. But the other thing about FATF that I think should be noted is that they're really just a guidance facilitator. They're not someone who actually determines laws and rules and regulations. NATO member countries can choose to implement some or all of the things that they guide on. And so I think it'll be interesting to see, not only what they come out with in October, but also who decides to implement aspects of whatever it is that they come out with. And in the US in particular, we spent a lot of time thinking about the CFTC, the SEC, and FinCEN. And those are kind of the three major regulatory bodies, and they each have different kind of levels of severity, but also different mandates in terms of what you can and cannot do based on their jurisdiction. FinCEN is in charge of anti-money laundering and know your customer rules. And so this is really kind of the Bank Secrecy Act. And this is probably the highest in terms of the food chain of things that can go wrong. And this is money laundering. This is dealing with someone who's on an OFAC list. That's the type of stuff that the FinCEN deals with. In terms of CFTC, you've got, Commodities Futures and Exchange Commission. They're looking at, basically any sort of commodity, any sort of futures, any sort of derivatives. And then the SEC is securities law, but then also derivatives on any securities. And so that's kind of their mandate. In terms of where we're looking right now, in terms of regulation, it's 100% gray area. And there's really kind of three ways that regulators can actually regulate. You've got the ability to change laws and actually add laws or change their jurisdiction. You've got the ability to use enforcement actions, saying that someone is doing something against the laws. And then the third one, which seems to be the most popular these days, is regulation by speech or by written word. And then this is used to actually be interpreted by lawyers to then say, okay, this is now sort of the new model of how we should be thinking about rules and regulations when it comes to crypto assets or DeFi. And so we've seen a couple of things over the history of speeches. We've seen sufficient decentralization come out in a speech, and then that became the new norm. And just today, we saw Gary Gensler, the chairman of the SEC, say that there's a lot of aspects around DeFi that could actually be considered securities. So it'll take a lot of time to kind of pick the pieces up from there and see where they land. But it is interesting because it's happening in real time, and it's interesting to watch, and we're definitely staying on top of it.
Yeah, I think we have no choice, right, but to stay on top of it. We're in a gray area. It will always be somewhat in a gray area, and as the regulation comes out, crypto moves so quickly that the new trend will come out, and then regulation needs to catch up. So you're always in that gray area, just hopefully just getting in a darker shade or a lighter shade. I'd like to ask on that regulation front if there is anything that is specific to DeFi for the people who are running these DeFi projects. If there's anything that should be kind of the way they should kind of think about regulation, and it could be from Asia, it could be the US, it could be international. There's anything for them to kind of think about, because you're right that there is nothing really for them. There's no real guidance. There's a little bit high level, but right now there's nothing firm for them. So is there anything they should be doing or watching out for? Michael.
Sure. Yeah. Well, I think the best way to approach this is don't do anything that you would regret later on. And what I mean by that is, there are ways, if you're distributed a token, there are jurisdictions that should not be included in that token distribution. There are controls, there are systems in place that help to monitor and track whether or not a wallet address is actually on a blacklist somewhere. Implementing those systems, implementing those safeguards, at least put a best faith effort forward to show that you're wanting to work with regulators. And I think the only way that it becomes impossible to work with regulators in the future, when maybe there's more clarity and maybe there's clearer lines, is if you've done something where regulators say there's no way that we can ever work together. So don't ever find yourself in that situation, and try to do the best with what we've got.
Yep, right. Jason, anything to add there?
Yeah, I totally agree, and I don't think I'm in a position to offer official legal advice. I would definitely lean on your GC if you have one in your startup. And I host this podcast where I recently spoke to Jake Stravinsky, who is a GC at Compound, and he gave some very solid advice in terms of what are the exact things and pieces of regulation that founders should be watching out for. So I think some of those things, as Michael mentioned, is the FedF guidance. Surely those are not the actual regulations, but I think that should give at least a sense for people like what might be construed as illegal. And maybe those are the things that you should at least steer clear of. And generally just don't do anything that is clearly illegal, even though there is no regulatory guidance right now. So things like issuing massive ICOs that are open for a long time, open to all types of retails with no kind of geographical gates. That's clearly something that probably is not legal. So exercise your common sense, and also definitely lean on your investors who have that in-house kind of legal support.
Yeah, I think that the last two things you just said over there, the common sense and leaning on your investors is very important, because it is a gray area, but there is guidance. And as long as you can show that you're trying your best and you're making the effort to adhere to those guidances, I think it goes a long way. So let's pivot a bit. Let's talk about the emerging trends that we're seeing. I'd love to hear about, I think a lot of people are interested in the emerging trends overall, but also specifically if there's anything you're seeing that is specific to Asia versus the US. Maybe we'll start with you this time, Jason.
Yeah, I think in terms of specific to Asia, I think in Asia there's a stronger kind of gaming culture in certain regions, especially in Korea, for instance. So I'm not very surprised that a lot of the growth in Axie Infinity, the example I brought up earlier on, was kind of kickstarted in Asia. Um, Not just because of the gaming culture, but because most of the developing nations in the world are based here. So that's part of it. And I think another emerging trend that we'll start to see is kind of DeFi penetration in emerging markets. So I think a lot of projects have tried to crack that. And a lot of stablecoin projects, for instance, have tried to kind of penetrate emerging markets and really extend credit to Asian markets. But one of the major challenges they faced was distribution, right? They had the tech, they had the stablecoin, they have this credit facility that's decentralized, but they couldn't reach the last mile like entrepreneurs who are in need of microfinance. So one of the projects that I got involved with recently called Goldfinch, they basically bypassed the problem by partnering up with lending companies. So they become the credit fund behind the lending companies. They basically provide capital from crypto natives to these lending companies, who then do the distribution to reach out to these kind of emerging markets. So it's still very early days, but that's something that I think will be huge, especially in developing countries in Asia.
Got it. That's great. Michael, over to you, and would love to hear from the U.S. perspective, but also since you said Australia and so forth, we would love to hear that too.
Yeah. Well, I was going to say those are actually the two things that we were probably most focused on over the last couple of months. We call it the verticalization of DeFi. And then gaming, I think, is a perfect use case, especially as you apply DeFi staking and token economic elements. Gaming and NFTs make a perfect cohesive unit together. I'd say the other stuff that we're really excited about, and this may be kind of obvious in retrospect, is just scalability leading into new primitives that just weren't possible before. And so one of the things, any week now, Arbitrum and Optimism are going to go live, and we'll have a full-fledged layer 2 solution or multiple of them on Ethereum. And pretty soon thereafter, we're going to have the merge of Ethereum, which will hopefully have 100x and then hopefully a 10,000x increase in scalability. What this ultimately means is that not only do we think that we'll have probably a more than commensurate amount of demand for block space, but it opens up the aperture lens for what types of applications can be built on top of Ethereum. We previously haven't been able to have an order book on chain. It's possible that we'll be able to have enough throughput to be able to do that. We previously haven't been able to have a fully fledged and hedged options AMM on chain. And I think that we'll be able to do that with layer 2. Things like insurance, where you need off-chain or pseudo off-chain computation are just not possible on the base layer that we have today. It's too prohibitively expensive. And so what we're really excited about, in addition to the verticalization and gaming elements of DeFi, is really that opening of the aperture lens of new financial primitives that just weren't possible 6 months ago.
Okay. Yep. Very fair, and I could not agree with you more. We've talked now about the similarities, the differences, as well as the regulation. Maybe one thing to ask you guys is what really needs to happen in order to stimulate the growth in these two regions, specifically to DeFi. What needs to happen in Asia to stimulate some of that growth, Jason?
Yeah, I think one of the challenges for Asia is it doesn't have at least I guess cohesive a pipeline of tech talent as say somewhere like the Silicon Valley, where you have the upstream factors, the great schools in the same region, Stanford, Berkeley, and so on. And then you have great tech jobs, a great tech economy that pays high wages to continue to incentivize people to get these degrees. And when I look at a place like Hong Kong, for instance, the average computer science graduate comes out and basically does IT support, which is not a very lucrative career versus a software engineer for Google. So I think cultivating the tech talent is something that is necessary to really incentivize more developers to come into crypto, at least locally. And what we've seen is, so whereas I think in Silicon Valley, you see the best and brightest in terms of engineers going to crypto, here we see the best and brightest in finance come into crypto. So financial engineers or financial analysts, but we'd love to see kind of more builders and developers as well. And that's something that I think would take a long, long time.
Michael, your thoughts?
Yeah, I totally agree in terms of having kind of the reciprocal effect in the United States. I think we've got a lot of engineers that need to understand basic economics, and I think having token economics be this new blank slate mechanism design platform where anyone can design really novel instruments and user feedback modules, that ultimately needs to be something that becomes commonplace. Whereas previously, the Silicon Valley mantra is you just build it and people will come. And I think that's not going to be able to be something that continues forward. And the thing that I would say, kind of in extension of that idea that we need to really focus on as an industry, whether it be Asia or the United States or Australia or anywhere, is investing in and building on-ramps for new users. Because right now it's pretty terrible to use MetaMask in the way that it is. And the UX is something that my mom would never be able to figure out. And I think we're just at the precipice of being able to have real world value for the applications that we're building. And the only thing that's really holding us back in a lot of ways, I think, is just the user onboarding experience for any new consumer to whether it be Ethereum or Solana or any other blockchain. And so investing in on-ramps, I think, is one of the things that we need to focus on as an industry.
Yeah. I mean, I I agree with you guys. I agree with you both a lot there. And Michael, I think I started getting into crypto about 2015, 2016, and trying to explain it then was near impossible. I joined BlockFi and liked BlockFi, not to show them by any means, but it was the thing that I was telling people is just put USD and earn Bitcoin. You don't know what a wallet is. You don't know what a custodian is. I'm just hit that switch that every single month you get Bitcoin, and then the interest peaks and you start YouTubing it, and then they all go down the same wormhole that most people go down. What do you guys think on that for DeFi? Because how about this? When will that come? In like 1 year, 2 year, or will it take longer? And what needs to take us to get there? It's the startups that you guys are investing into, I would imagine. But what is that kind of pivotal point where your mom, our uncles can sit there and be like, yeah, I mean, maybe it's not even called DeFi then. Maybe they're gonna call it something else. But what is it to that point where they can get in? Because it's lucrative. It's easy to understand, like Jason mentioned earlier, when you talk to family offices and all, it's the same terminology. But what needs to get there so that people can get it? Any thoughts?
Yeah, my quick reaction to that is I don't think there's a silver bullet. I think there's a bunch of lead bullets, and I think we're constantly improving the UX every single week. And it's something that as a new product comes out, it's done a little bit better, and that kind of raises the bar for every other product out there to say, okay, well, if you want to get users in the way that, for instance, Slingshot got users, you have to make it as slick and easy to use as Slingshot. And, I think things like MetaMask are a large kind of bottleneck for this growth. Also, I think things like EIP 1559 in particular to Ethereum do actually make it a lot easier to use the blockchain in terms of understanding how gas works and understanding what the price is to get into a block. So removing kind of the negative UX, I think in addition to improving the UX, over time we'll have nonlinear effects, but I don't think that there's going to be that one moment where we look back and say, oh, that was the moment. And I think it'll just slowly happen over time.
Jason, any thoughts?
Yeah, and mine's a bit of a cliche answer, but I do think bridging into existing applications. I guess this is what Michael, you described as verticalization as well. So an example is I spoke to one of the largest neobanks here in Hong Kong about potentially onboarding crypto. So the experience would be basically the same as if you were using your neobank on your mobile phone, but you probably get a button that says, hey, stake for X% yield. And you don't even know that it's staking you wouldn't even know that it's converting your Hong Kong dollars to USD and then to USDC and then putting it on Compound and Aave. It's completely abstract away for you. They're not quite on board with that yet. I think it's going to take them a little bit to be to be comfortable with onboarding crypto. But I really think tapping into those on-ramps that people are already comfortable with, already using, is going to be massive. I mean, just look at the amount of interest that Robinhood brought to crypto from the Gen Z kind of meme stock crowd, right? So I think you can replicate the same success by using a lot of the neobanks, a lot of financial applications that people already use every day.
Yeah, a lot of it is also just explaining the risks, right? And making them understand the risk. When they understand the risk, they understand it. Because the funny thing is, when you go to a traditional bank, they don't understand the risk. And that's what we saw in 2007, for example, right? And I think that what that did is raise awareness to that same crowd who's on Robinhood, that they need to understand the risk in order to not make the same mistakes the last generation did. So I think there's a little bit more risk awareness now. And once we're able to explain the risks that because there's obviously risks in any investment. Once they're able to understand that, it becomes quite an easy bridge. So let me ask you guys, I'm going to pivot away from this a little bit and talk about, so most of DeFi is currently denominated in USD. Do you think this is the long state run? Or do you think, and if not, like, what are some of the developments that you think that we need to bring to DeFi in order to go to the other fiat currencies? Jason, maybe to start with you, since we're living in a world of 1,000 different currencies around us.
Yeah, for me, I guess it's a little bit unique because Hong Kong dollar is pegged at a fixed rate to USD, so it doesn't doesn't really affect so I don't have to kind of think about foreign exchange. But I suppose for folks playing Axie Infinity, for instance, if they're earning the SLP token, if they're selling it for like USDC, which is the most liquid market for it, or for DAI, which is a USD pegged coin, they have to kind of entertain the currency exchange rates. So I do think for DeFi to be mainstream, you can't just be an exporter. You can't just make DeFi an avenue to export USD monetary policy to the rest of the world. You kind of need that local denomination. I'm actually quite surprised that some of the localized currencies like Korean won on Terra haven't taken off massively yet. And I think that's because most of crypto is still trading against USD based coins, like, be it DAI or USDC or USDT. So I do think it's just a matter of time, and I think it goes hand in hand with the answer I gave just now regarding kind of tapping into existing on ramps that people are used to. So if you're using a neobank whose denomination is in your local currency, it makes sense for your demands in DeFi to also be denominated in that currency. So I do think it's something that will happen, but something that's gonna be quite slow to happen.
Yeah, I was quite surprised that some of these the local stablecoins have not taken off as much as I thought they would. Michael, like for example, in the Aussie one, if you're sitting in Australia to USD has already moved down this year 5%, I believe, give or take. So obviously that's going to play into effect in the longer term. Do you have any thoughts on this topic?
I mean, I sit here in the United States and everything's denominated in USD. But one thing that I will say is I think fiat currencies are more of a regional phenomenon. And I think one of the aspects of DeFi that would make real use cases very, very simple is having an auto convert to local currency. You can basically be presented with prices in whatever it is that you are used to seeing, because you know what that's worth, and you can make that value judgment instantaneously instead of saying however many decibels of ETH or wrapped Bitcoin. You can say, okay, I know that it's worth $5 or X AUD. And I think that that model actually is perfectly fit for what we should be building. And then no one really has to do any thinking, and they can decide how they want to spend it based on what assets they want to pull from, but the amount is denominated in the local.
Yeah, very fair. And it'd be great if we could see that. It'll be very interesting to see if these stable coins and local currencies pick up. Jason, what I like also to tell people when I talk about Asia versus US is we're basically taking the map of US, putting it on top of Asia, and every single state is a different country with 100 million people, a different currency, a different culture, a different religion. And it's just it's fascinating, right? Because you'll see some projects take off globally, but for the most part, you have your own local version of everything, right? We've seen a local version of BlockFi everywhere now, and with all their own cultural differences and so forth. All right, we have only a few minutes left. I think what would be really helpful, since you guys both just raised large funds, I think for the people listening, for the founders listening who are running their own projects, it'll be really nice for them to hear advice from you guys on fundraising. You can talk about global, talk about Asia, talk about US. I think it'll just be really nice for them to hear advice from you guys. Jason, we're going to start with you.
Yeah, I think in terms of fundraising, there is this common trend from founders to try to go for name brands. So they try to raise from names they've heard before, not necessarily trying to optimize for funds that can work with them the best. So we really look up to guys like Vance and Michael behind Framework, because they put in so much effort in supporting their portfolio companies, and I definitely call on founders to find the type of funds that have the expertise to work with them on specific areas that they need help on, and optimize for strategic partners rather than trying to raise from whatever fund that appears in the most headlines, and trying to raise from the big or the bigger funds just because they're bigger. And that's so. For instance, if you want to partner with more Asia partners, if Asia go to market is an early concern of yours, then speaking to more funds here, that would definitely be helpful.
Yep. Michael, please.
Yeah, so I would even maybe take a step back and say, based on market conditions that we're currently seeing, up, down, sideways, crab, whatever it may be, I think what is really important is to just keep blinders on and to keep your head down. And this actually becomes a great opportunity to build while everything else is not on fire and not raising X amount at Y valuation every single day, and don't be dissuaded by market pressures. And so that's the first piece of advice. The second piece of advice that I'd have is really exactly what Jason said, but find someone who really wants to dig in with you, and is form fit and native to the ecosystem that you're building in. And Spartan Group is an amazing example there, where they're DeFi native along with other funds. And if you're building a DeFi protocol, you want to have someone who's DeFi native. And if you're building something that's an NFT based protocol, then you're going to find someone who really understands that, because there isn't really this prestige or brand affinity that Jason was talking about that you used to have in traditional venture. Now it's about how much can you add to the protocol or the project itself.
Yeah, that's great advice, and I think the founders who are listening in will really appreciate it. So that's all the time we have for today. Thank you very much, Michael. Thank you very much, Jason. And I hope you guys all had fun listening to them, and it was valuable insights. I definitely got some. And thank you very much again to SCB 10X for hosting. Appreciate it, guys. Thanks a lot.
Thank you, guys.
Thank you.